April 2010. Nokia is the undisputed king of mobile phones, commanding 40% of the global market. Then, it nearly disappeared. April 2026. Nokia's stock hits a 16-year high again, but this time, there's not a single phone in sight. This is the story of how Nokia died once, and quietly became one of the most critical companies of the AI era. Nokia wasn't always a phone company. Founded in 1865 in Finland as a paper mill, by 1998 it had become the largest mobile phone manufacturer on Earth. At its peak, 4 out of every 10 phones sold globally were Nokia. The 3310, the 6600, the N95, iconic products in over 140 countries. A brand synonymous with reliability. That was Nokia at its height. January 2007. Steve Jobs introduces the first iPhone, a touchscreen device with no physical buttons. Inside Nokia, the reaction was dismissal. Touchscreens were seen as a gimmick. Nokia doubled down on its aging Symbian software instead of responding. That single miscalculation cost Nokia the next decade of consumer relevance. Android and iOS rewrote the rules while Nokia stood still. Market share that once topped 40% collapsed into single digits within 5 years. In 2013, Nokia sold its entire mobile phone division to Microsoft for 5.4 billion euros. For most observers, that was the end of the Nokia story. It wasn't. After the Microsoft sale, Nokia retreated into network infrastructure, the invisible plumbing of the internet. In 2016, Nokia acquired Alcatel-Lucent for 15.6 billion euros. This added optical networks, IP routing, and Bell Labs to Nokia's portfolio. The new Nokia would no longer make phones, it would build the networks that carry every data packet on Earth. Today's Nokia operates in 2 core segments: network infrastructure, serving AI and cloud companies through optical networks, IP networks, and fixed networks, and mobile infrastructure, covering 5G radio equipment, core software, and Nokia's patent licensing business. None of it is on a store shelf. All of it is essential. From 2017 to 2023, Nokia was easy to ignore. Telecom infrastructure spending is cyclical and conservative. Nokia's stock traded sideways while the tech sector boomed around it. Growth investors chasing Nvidia and Amazon had no reason to look at a Finnish network equipment company. But Nokia was quietly laying the groundwork for a shift that would change everything. Training a large AI model requires moving staggering quantities of data between thousands of servers, far beyond traditional cloud computing. That data travels through optical networking, light pulses through fiber optic cables at speeds copper cannot match. Nokia had spent a decade building exactly this technology. The addressable AI and cloud networking market is now projected to grow at 27% annually through 2028. Nokia's moment had arrived. April 23, 2026. Nokia publishes Q1 results. Shares jumped 7% in Helsinki trading, hitting their highest price since April 2010. 16 years. Comparable net sales grew 4%. Gross margin expanded 320 basis points to 45.5%. Operating margin expanded 200 basis points to 6.2%. Comparable operating profit reached 281 million euros, a 54% increase, beating analyst estimates by a significant margin. The details behind the surge. Optical Networks' net sales reached 821 million euros, up 20% on a constant currency basis. AI and cloud customer revenue grew 49% year-on-year, reaching 350 million euros, now 8% of total group sales. Nokia booked 1 billion euros of AI and cloud orders in Q1 alone. Free cash flow was 629 million euros. Net cash on the balance sheet, 3.8 billion euros. Source: Nokia Q1 2026 Interim Report. CEO. Justin Hotard described Q1 as a solid start, with net sales, gross margin, and operating margin all expanding simultaneously. He upgraded Nokia's AI market estimates, the addressable market now expected to grow at 27% annually through 2028, up from 16% estimated just months earlier. At the OFC conference in March, Nokia announced 4 new digital signal processors powering 13 solutions that reduce customer costs by up to 70%. For full year 2026, Nokia expects network infrastructure to grow 12 to 14%. Combined optical and IP networks, the AI infrastructure engine, projected to grow 18 to 20%. The Americas region leads, reflecting U.S. concentration of AI investment. Book-to-bill in optical networks is well above 1. Orders arriving faster than Nokia can fulfill them. The growth engine is clear. Nokia is investing aggressively to capture this demand. Capital expenditure guidance raised to 900 million to 1 billion euros for 2026, primarily for optical networks manufacturing expansion. In Pennsylvania, Nokia is expanding semiconductor testing capacity aimed at AI infrastructure. A new indium phosphide manufacturing facility in San Jose begins production ramp later this year. Nokia is not just riding the wave, it is building capacity to own it. The turnaround is reaching shareholders directly. On April 23rd, Nokia's board approved a dividend of 0.04 euros per share, the first installment of a total authorization of up to 0.14 euros per share for financial year 2025. Remaining authorization, up to 0.10 euros per share, still to be distributed. Net cash of 3.8 billion euros and quarterly free cash flow of 629 million euros support continued distributions. Nokia's comeback isn't about nostalgia. It's about a decade of unglamorous infrastructure investment meeting a once-in-a-generation surge in demand. The optical networking technology Nokia built didn't become important because of AI. It was always important. AI simply created demand that made it undeniable. The company the world wrote off in 2013 now quietly powers the physical backbone of the AI revolution. 3 chapters. The death of the hardware brand, dismissed the iPhone, sold phones to Microsoft in 2013. The invisible rebuild, 15.6 billion euro Alcatel-Lucent acquisition, a decade of infrastructure investment. The AI supercycle, 49% AI and cloud growth, 20% optical networks growth, 54% operating profit growth, a 16-year stock high. Full-year outlook, 12 to 14% network infrastructure growth, 18 to 20% optical and IP networks growth. Every company has a story. Nokia's numbers tell the rest. Subscribe. The next story is already in the numbers. Every company has a story. We tell the numbers. The Analyst story. Subscribe for more.